Trading Market Technicals morning call video for Wednesday, July 12th. We had another down day. Equities finished fifth straight session lower, longest losing streak since May. And basically what happened, we kind of gapped lower a little bit, went sideways until the FOMC minutes came out and from the June policy meeting, and they said little hint of any further stimulus was going to be provided, and the market sold off on that. And I think that was to be expected. I surely wasn't looking for an additional QE3, but the anticipation was high, and they thought that a lot of these other central banks that are around the world that are actually easing thought that that we were going to ease as well. And that did not happen, and we actually sold off at the end of the day. But crazy what happened was that we ended up getting a rally at the end of the day to really pair off a lot of the losses. So interesting to take note of. And you noticed I've been pointing out at the last several sessions we've gotten rallies at the end of the day. So could be fueled a little bit of short covering, I would assume. But nonetheless, the rallies at the end of the day is an interesting point to make out. Tomorrow we get our initial jobless claim, and it's funny. I have this chart in front of me, and I found this on the internet when I do my research at night. We have the S&P 500 overlaid on the initial jobless claims, which are plotted in a chart format. So if you could see here, I really don't read too much into the initial claims every week, but nonetheless, now it's becoming more of an importance here. As you can see here, back in 2009, we were in a recession, and we actually started dipping. This is really interesting. If we start to roll over here and we start printing some negative numbers again, numbers getting worse and worse, I think we're going to get that roll over here, and we can actually start to move lower. So this is something to keep an eye on. This is not actually something that you're looking to trade off of at the moment, but it's been more of an importance. So I'll be definitely looking to see that. Especially that we had our non-farm payrolls were horrible, so that's something really to take a look at. The next step is really, we're down 5 days. What do we do from here? Like I mentioned before, this is a very dangerous market if you're not accustomed to this type of quick moves. You could have been short yesterday, and you could have been stopped out towards the end of the day on that rally. So stops should be in place. Keep them tighter than usual. Maybe reduce your share size a little bit, whether you're swing trading or day trading for the day. As you can see, this is totally news-driven with a lot of anticipation. There's a lot of uncertainty out there, so one needs to really keep a close eye. And if you have profits, you need to really take them and at least protect them at the very least. So what we're looking at here is, okay, so we pointed out last week when the McClellan oscillator was way up at nosebleed sections here. Hey, look for the pullback. Beautiful, beautiful call. We actually rolled over for the last 5 days. And the sell-off, believe it or not, was not that bad. This is something that, yes, the charts are a little bit, should I say that they're broken a little bit? They don't look so great. I'll get into them in the charts in a moment, but they can be recovered. Let's put it that way. If the bulls could step up to the plate now, we are at a critical juncture in a lot of these sectors where they need to step up to the plate. We need to bounce here. Now, speaking of the bounce, do we bounce? And it's a low volume bounce, and we make a lower high off the original high, and then we start to roll over again. That's going to be really concerning. So the characteristics of the bounce is going to really be key here. That's going to play the role of the next trend. So if we bounce hard and we rally with volume, then I could say, hey, you know what? We're probably going to test that 1390, 1390, 1400 in the S&P cash, and that inverted head and shoulders will probably play out again. If not, and we start to roll and we make a lower high, then we're looking at probably 1260, 1280 in the S&P if we break these uptrend lines that we're making higher highs. So that's something which we're going to take a look at. A couple things that are concerning to me, and I've been pointing out, is as you can see here, here's the Shanghai, and here's all the other European indices as well as the S&P here in red. And the S&P clearly just propped up, as well as all the other indices on a lot of central banks easing, and the Fed, of course. And this is definitely not what we want to see here. Now, we are oversold. We do have a little bit of a double bottom here. We actually closed, Shanghai closed a little bit higher here yesterday. We really need to see this start to move up higher. If in fact we do move up and then we fail, and we take out this low here in the Shanghai, I think all bets are off on the upside, especially that that you have copper lagging. Now, copper actually didn't do too bad yesterday, so this is another point I'm making. It held the 20-day moving average, and although we had this sell-off, copper really didn't do too bad, and the VIX actually really didn't start screaming to the upside. So, couple of negatives and a couple of positive for the bulls and bears. But again, if copper starts to lose this area here, okay, and then we ultimately lose this double bottom here that we've created earlier, and the Shanghai starts to move lower, I think all bets are off, and I think you can actually literally get aggressively short to the downside. Now, we are in these seasonal tendencies to be weak here the last couple of weeks in July. Sometimes at the end of July, going into the first week of August, we start really starting to, kind of fading the downside, and we start picking up momentum and get a little bit of summer rally going into September, and then, of course, the reevaluate what's happening going into the holidays. But really key here, Shanghai, copper. Here's the VIX. And again, VIX really didn't do much here. If you can see here, we have this little wedge, maybe this fallen wedge here. Now, this is important. This is a bullish pattern here, this fallen wedge. But as you can see here, we were capped by the 20-day in the Bollinger Band. So something we really need to keep an eye on. If the VIX starts to scream higher and we start getting that sell-off that we're looking at, then I think really all bets are going to be off here. Now, here's another thing that's concerning. Here's a ratio chart of the consumer staples and the consumer discretionary. You do not want to see consumer staples leading consumer discretionary because it basically tells you risk off. And this is something that's quite disturbing if you're a bull here. So another red flag we've been posting. As you remember, a couple of weeks back, I said that the longer-term charts are also showing head and shoulders patterns, descending triangles, on the longer-term charts. Now, again, they don't have to play out, but it's just something I want to keep an eye on. But look at the daily charts on a lot of these things, and as you can see here, the ratio chart of the consumer discretionary and consumer staples not looking too good here. This is not what you want to see. So this is something that's concerning. Another concerning is the dollar, and that is the key barometer right now. As you can see here, this bull flag we had a few weeks back, we sold off, and now we're breaking out of this area here. Now, we are at this area right now, this little wick at the top of the wick of this candle. If we continue to break out, I think that it's going to be very, very, very difficult to start rallying, especially when you have the dollar rallying, the VIX rallying, consumer discretionary versus the consumer staples starting to rally. Not good. Shanghai selling off, so a lot of variables over here. So again, the next bounce would be really watched closely. And again, we're down 5 days. Can we go lower? Sure. But initial jobless claims is going to really push the momentum to the side today and see which direction we're going to go. Now let's take a look at the some of these charts here. Now the transportation sector, double top. Here's the trend line. We are at the trend line. We just broke the 20, and we're sitting on the 50 and the 200, just below the 50 and above the 200. This is a real critical juncture, guys. Transportations is the leaders of all the sectors, and we have a double top here with this triangle. There's this trend line higher high, higher high. We start to lose this, and we get a back test and fail, then I think all bets are off again to the downside. Russell, take a look at the Russell here. Russell holding up a little bit better, which is not bad to see. We did have that little trend line break higher. We did make that higher high, and this is the only sector that has done so. And now we're back testing this downtrend line. So again, above the 20, 15, 200, but something that we need to really keep an eye on because it's a good gauge of risk on, risk off. Now, Dow Jones is in trouble. We had already broke the downtrend line, and this is not obviously what you want to see. Now, it's not a leader, but the industrials could be a first showing that hey, we're headed low, or we broke the 20, we broke this trend line. Now, today other sectors could rally, and this will rally along with it. So, but just keep an eye on that. Here's the composite, and again, same thing. We are holding this trend line. This trend line in all of these sectors I'm showing you guys is going to be really critical here, okay? And then once we break that, it's going to be a magnet to the 200-day moving average. So not looking too good, not really promising. But again, something to keep an eye on. I just want to show you that Shanghai index here. Again, we had this little low, and and the rally back down to testing that ratio chart. All right, guys, that's really about it. We'll see what happens today. Keep an eye on initial jobless claims coming out at 8:30. It's going to be real critical. Earnings, big earnings tomorrow. J.P. Morgan, Wells Fargo. That will also put some sort of a market trend for the day based on their numbers. And if everybody's talking the way they're talking, I don't think they're going to come out too favorable. But again, we don't assume anything. Let's trade what price is telling us, and let's go from there. Please keep your stops in place and reduce risk right now. There's no reason to take on additional risk the way this market is. Okay? Have a great day. We'll talk to you tomorrow. Take care.